Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at the VRA token. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Now, Verasity has been doing very good for the last 24 hours, actually for the last couple of days. And the markets are recovering, but I do think this is a little bear trap that we're going to have, or a little bull trap, actually. And I do think we're going to have a pullback because the Chinese New Year was on February 1st. And per my calculations, a week after the Chinese New Year, we get a pullback. That happened last year as well. So I am expecting a pullback on February 8th or 9th. I may be absolutely wrong about this, and I probably am, but it's just interesting, just something that I'm looking forward to seeing if it actually plays out. But don't take my word for it. Obviously, you should be ready for both outcomes at all times. You should be ready for a pump at all times, and you should be ready for a flash crash at all times with your buy orders ready and set to go. Now, jumping into the weekly chart, we have the 20 EMA up and we have the 55 EMA up. The 20 is the yellow, obviously, the 55 is the red. Now, what I do think is going to happen, or potentially is going to happen, is we may run into the 20 EMA on the weekly as resistance. So we can run into that and start coming back down, because as you can see, we haven't had a back test of the 20 EMA as resistance ever since at the end of December was the last time we had a bounce off the 20 EMA. So this is a potential play that I'm looking at. I do have some VRA right now. The sell alerts and the buy alerts are on Patreon, so feel free to check that out as well. But yeah, like I said, that's something to look for on the weekly chart. For the most part, what you need to be doing is breaking this swing high over here, because you had to move to the downside. You bounced off the 55, you created a high. So you need to get back above 0.04 cents. And if you don't do that, then that's just a lower high. Now, jumping into the RSI, so we can see that the weekly RSI is, actually having a nice little move over here. Let's just compare the price action with the weekly RSI, and we can actually see that we're having a hidden bullish divergence here. Now, why do I say that? Well, because let me actually bring back the drawings. Wow, that's a lot of drawings. I do apologize, but you can see that. Let me actually remove them once again. Yeah, sorry, that was a bit confusing. So you can see that the RSI is printing a lower low. Basically, over here you have this low, which corresponds with this low, right? And you have this higher low on the price action, which corresponds to this low on the RSI, but this low is a lower low. Now, this is a hidden bullish divergence, and this is potentially a precursor to a significant move to the upside, and potentially we may even break the all-time high over here, but that's a bit too soon to say. Let's see what happens with the markets, and that's just something to keep an eye on. A hidden bullish divergence on the weekly chart is very strong in my opinion. So let's move to the daily chart. Okay, now if we start zooming in on the daily chart, let's get rid of that price tag. So you can see that we were below the 0.5 on the Fibonacci retracement. Obviously, the Fibonacci retracement has the swing low here in July and the swing high in April. That gave us the 1.618 target over here at 19.5 cents, which I do think is doable this bull market at least. We may even get overextended all the way to 42 cents at the second fib level, or just slightly below that, who knows. But these are our targets that we can have based on the Fibonacci retracement. Now, what I would be looking at is, let's just get rid of this smaller fib retracement. I didn't clean up the charts before the video. I usually do. I apologize. So we do have this resistance level, this white trend line over here. As you can see, I'm just going to change its color to pink so it stands out. So as you can see, that is a resistance trend line that we've been hitting one time. We haven't had a back test of that line, and then we had another rejection from it over here. So that is a line that you should be eyeballing as a potential resistance line. So basically 5 cents roughly is your resistance line, and from where we are right now, that is a 52% move. And if you bought in at the support of this channel up pattern, then that's a 197% move, because if I zoom out, you can see that we are in a channel up pattern over here. which means that we are moving in a channel to the upside. So as you can see, and eventually you're going to get a break to the upside or a break to the downside. Now, if we are to continue this bull market, then obviously I'm biased towards a breakout to the upside, closer to the end of the bull market, which I'm thinking is going to be sometime during April, May, but who knows? No one really knows when that's going to happen. Also, keep an eye on this white trend line over here. It is also a resistance trend line that you should have on your chart, because we had a couple of bounces from there, actually. A couple of bounces from that area, and we did hold it as support very nicely over here during the December dip, but we ended up losing it as well, and we even back tested it as resistance. So you have to keep an eye on this level as well. This is some place that we can get rejected from as well. And if I bring out the price tag, then we do have the 786 Fibonacci retracement on that level, or near that level as well, at 0.03635 cents. So from where we are, that's still another 11.5% move. So we can get rejected from there and have another pullback. And I would look at the golden ratio over here as your nice support level at 0.026 cents. And below that, we do have the 20 EMA on the daily chart, which is starting to curl up for that potential bullish cross on the daily chart, which would be your nice buy signal. And yeah, that's something to keep an eye on as well. Now let's jump into the RSI on the daily chart. So as you can see, this is just a straight parabola. This is unhealthy. You're going to have a move to the downside, right? You basically in a day went from, all right, well, not in a day, but in 48 hours, you went from almost near the oversold to the overbought, which is pretty unhealthy. But I don't know if there were any news coming out, but I'm just going to have to check. So we do have this pink trend line. As you can see, we had a couple of bounces from that line, and now it's turned into resistance, and we may run into it as a resistance over here. We absolutely went and blasted through all the resistance white trend lines that we had drawn out previously. So I don't know, we may potentially land on them. Let me just give you the price tags on them. So 50.8 on the index and 57.06 on the index are your support trend lines for the RSI over here. And below that, you do have another support trend line over here. You can draw as many as you want, obviously, but I'm just trying to find the main ones and the ones that have the most touches. That's why I give you just a few of them, because I know there's going to be a guy who says like, well, you can draw as many as you want, but you can say that about really any support and resistance line on any chart. So yeah, let's jump into the 4-hourly chart now on KuCoin. Now jumping to the 4-hourly chart, we have a buy zone here with the yellow rectangle anywhere from 0.01906 to 0.01734 is a nice buy zone that I would look for to dollar cost average into my position if we have a pullback. Now on the 4-hourly chart, we are printing a bearish divergence where the price action is printing a higher high, where the RSI is printing a lower high. The MACD is starting to get a bit overextended, as you can see over here. So this is a nice signal to take some profits. And yeah, that's pretty much it for the 4-hourly chart. The 20 EMA should hold us as support unless it starts turning vertical. At that point, I would look for the 55 EMA to hold us as support. So I really do think the 55 is a good level to buy in if you sold over here around about the 55 EMA, yeah, or you can look at potentially the 0.236 on this Fibonacci retracement. Now I do have a bit of a different Fibonacci retracement set up over here. This is a swing high that we had on December 1st and the swing low that we had here on January 24th. We just broke through the 0.786, and potentially we're looking for a full retracement all the way up here to 3.5 cents. So let's see if that happens. I am expecting a pullback for all cryptos relatively soon, guys. So what I recommend is just always having some spare fiat to buy into the dip. But that's pretty much it. If I missed out anything on the charts, please let me know down below in the comment section. Feel free to follow me on Twitter. I do post technical analysis in there. We do have a Telegram and a Discord server. And feel free to check out our Patreon. Great way to get some low cap jump calls, buy and sell alerts. We do have a mid cap project highlights, market sentiment analysis, personal technical analysis requests, video requests, and all that type of stuff is in there. I do around about 2 to 4 posts in there a day, which I don't want to brag, but I've looked at some other crypto YouTubers' Patreons and they weren't that impressive in terms of posting. I don't know if like, I'm not trying to shit on anyone obviously, but I'm just saying that you know, I really do like posting in there, and I do try my best to provide, you know, the most quality content that I possibly can. So yeah, feel free to check that out. I'm gonna catch you in the next one. Peace out.